Well, hello everyone. I'm Eric Kennis. I'm working at the Egmont Institute, organizing this event of today. And I must say it's really a big honor. It's a privilege for me to be able to present Professor Miles Larmer, who is really the world level specialist of anything related to Zambia. Has published extensively. I won't cite his books and articles because then we would need another hour and a half, I think, before I'm finished. I think after some books about mining in Zambia, politics in Zambia, even rethinking African politics through the opposition in Zambia, published also one about DRC, probably about Katanga, and then which we did together, and finally, I think the latest one, but maybe someone has another one, maybe has been published since. The latest one, I think, was a very interesting project comparing the Copperbelts, so between the Katanga Copperbelt and the Zambian Copperbelt, which has been published, was a project funded by the European Union, an ambitious and really very new project, because it doesn't happen very often that comparisons are being made, and certainly not a research project between an English-speaking and a French-speaking country. So that's what Professor Larmer did. So we thought to invite him because the 2021 election in Zambia was, by all accounts, a very unique and noteworthy event, because as far as I know, and Professor Larmer will correct me if I'm wrong, most observers thought that the Zambian president, Lungu at that time, wanted to cheat the elections, and I mean his public policy was not very positive. The country was very much indebted, but then he tried everything he could to remain in power, and surprise, the opposition leader won the elections, which is an event that has been very little commented upon, but it's a bit counter trend. Because as we all know, the trend in Africa in general is delegitimation of elections, and in Zambia exactly opposite occurred. I think Zambia has a very interesting political history, and we thought that to explain what happened and the background of all this, there's only one person who could give us an elaborate answer on this, an expert answer rooted in long experience with the country. So thank you very much, Professor Larmer, for joining us. And maybe I can give you the floor.
Thank you, Eric. Thank you to the Egmont Institute for this opportunity to speak. I hope you can now see my slideshow, which I would just use as sort of background here. Just bring that up. Eric, can you just confirm you can see this okay? You will have to nod because you've very sensibly already turned your mic off. Very good. Okay, I will begin, and Eric will interrupt me if I talk too long or talk possibly uninterestingly. I'm aware that the audience is a broad and diverse one rather than a set of Zambian specialists. So I will seek to speak in a way that convinces you this is an interesting and important story. Just last week, Zambia successfully renegotiated $6 billion of its international debt burden. And this important event was rightly heralded internationally as a significant achievement of the government of President Hakainde Hichilema, which came to power 2 years ago. And as Eric said, Hichilema achieved a sweeping, unanticipated election victory, a notable success achieved against a hitherto powerful incumbent, Edgar Lungu's Patriotic Front party. And Lungu had himself risen to popularity and power via criticism of foreign multinational and foreign investors. His party, Patriotic Front, which I'll talk about briefly, successfully tapped into a powerful and enduring idea in African politics, and in particularly in Zambia, that the country's vast mineral wealth was, as it always has been, exploited by foreign powers and capital, and that allegedly ordinary people saw no benefit from it. PF Lungu's party had achieved political success via that discourse for a decade or so. But the new President Hichilema and his United Party for National Development, after an even longer period in opposition, was finally able to win, despite articulating what was ostensibly an unpopular message, one of good governance, fiscal responsibility, and future austerity. And most strikingly, as I'll show, Hichilema won support in the country's economic and politically strategic mining region, known as the Copperbelt, which PF, the hitherto ruling party, had successfully targeted previously as a central electoral support base with these populist attacks on the foreign mining companies that dominate the economy there. So my presentation today seeks to explain this paradoxical outcome. On the one hand, this is a good news story, successful electoral alternation, the coming to power of a government committed to financial transparency, positive relations with foreign governments and investors. But given the continued, and in my view, entirely understandable, unpopularity of foreign mining companies, how will the Hichilema government ensure it meets its commitments both to markets and donors, but also to the electorate that put it in office? In order to answer this question, this paper that draws on my research by myself, but also Dr. James Musonda, provides analysis both of national politics and its local manifestation in the strategic Copperbelt region. So I'm exploring here the power and the limits of what we might term political resource nationalism, the use by parties of anti-foreign investment attacks and the mobilization of this popular enduring discourse against foreign investment, the idea that mining wealth is being illegitimately extracted. I'll talk about that in some detail. I won't talk a lot about mixed methods and the approach here, but we're combining James Musonda's extended ethnographic engagement with Copperbelt communities, which he himself comes from, to see how this was understood on the ground. And I'm going to analyze electoral data showing a striking turnaround in the outcomes of elections between 2016 and 2021, both nationally, but with particular focus on the Copperbelt. I'll also briefly at the end talk a bit about Hichilema's record in power over the past couple of years and how we think that is going to go in the future. Very briefly, some history. It's important to be aware that organized politics in Zambia has always been influenced by industrial mining since its globally strategic copper mines opened in the 1920s. Protests and strikes in the 30s and 40s led to the establishment of trade unions and their significant role in anti-colonial mobilization up to independence in 1964. The centrality of the mining industry to the national economy meant that its ownership and policies were always politicized. We can see on the one hand, the new national government led by a first president, Kenneth Kaunda, making demands on the mining industry for higher taxation and greater investments, while on the ground, mine communities and organized labor focused on and used strike action to demand higher wages and improve social conditions. Those demands informed mine nationalization in the late 60s and early 70s, but political pressure on mine companies to meet those social, economic, and political obligations then declined along with mineral prices, which in general remains low from the late 1970s to the early 2000s, when the mines were again re-privatized. And with that privatization and the implementation of neoliberal economic policies, social services provisioned by companies of housing and other services reduced. Nonetheless, Copperbelt communities continue to make demands on the new mine owners that drew on this historical provision of state provision. Privatized mines operated under initially secret development agreements that guaranteed them low tax or royalty rates and ensured that the burden of social provision in mine areas would be borne by the state. Now, despite the relative decline of Copperbelt mining's importance to the Zambian economy, the region has continued to play a disproportionate life in politics and elections. And a key change was that mineral prices, which had been low, as I've suggested, for many decades, were transformed in the mid-2000s. The value of copper, the key mineral, rose sixfold from 2002 to 2008, largely as a result of increased Chinese mineral demand. And with the consequent return to profitability of mine operations, greater political pressure was placed on the new private owners of the mines to ensure that in some way a greater proportion of their royalties, their profits, their earnings went to Zambians. And nationally, that took the form of higher tax and royalty demands. In the context of Michael Satter, you see his image at the bottom, his Patriotic Front party, Satter formed PF and propelled it to government in 2011, partly on the basis of its populist attacks on foreign investors and their neglect of Zambian communities. Satter established a successful electoral platform, consciously mobilizing these historically important Copperbelt mining communities, and particularly the varied mine workers trade unions that had historically been very powerful. By this time, they were weakened in organizational capacity and influence from their heyday in the 1960s and 70s, but they remained an important interface between national politicians and mine-based communities. And Satter was identified by various writers as being part of a wave of African populist politicians from South Africa to Tanzania, and more widely, significant in this period. It's nonetheless crucial to note that in power, once in office, he did little to turn his rhetorical criticism of foreign investors into decisive policy changes. So little of the vast revenue generated by companies through these high mineral prices directly benefited the country or its citizens. In 2013, Zambia exported more than $6 billion worth of copper, but only $197 million was paid in income tax by the entire mining sector. Now, Satter's death in office in 2014 and the elevation to the presidency of new PF leader Edgar Lungu heralded a more aggressive resource nationalism. What I'm going to talk about next is two of Zambia's mining companies and the way that Lungu directly targeted them in terms of policy changes with electoral gain in mind. So let me turn briefly to these two key case studies. Konkola copper mines, owned by the Indian company Vedanta Resources, rapidly acquired in the early 2000s a poor reputation for high and locally regarded, unanticipated, illegitimate profits on its Zambian operations. In 2014, a video showing Anil Agarwal, Vedanta's majority owner, bragging about making easy profits of $500 million each year from KCM went viral. The company, however, publicly declared annual losses and failed to provide promised investments. Instead, it sought to maximize short-term profits and failed to develop its vast underground resources, including the key KDPM project along the border with the DRC. In 2011, Vedanta recalled its loan to KCM. It failed to meet its commitment to inject investments, and significant criticism of its operations emerged when, in 2013, President Satter threatened to revoke the company's operating license when the company threatened to retrench 1,500 workers. In 2014, the government launched an audit of its operations, and this showed that despite high mine revenue, KCM was highly indebted. Court cases followed. Vedanta was accused by the vice president of, quote, removing a lot of money from Zambia, end quote, and pressuring the government to take on liabilities. And those elite national representations and criticisms were matched by local expressions of discontent. You can see on the bottom, the Mine Workers Union leading demonstrations, public protests by the company's subcontractors. KCM was accused of failing to pay workers the minimum wage, failing to pay redundancy packages. And this confrontational nationalist approach of first the Satter government and then Lungu as his successor contributed to the electoral success in the Copperbelt of PF in 2016. Once in power, Lungu continued these criticisms, and in 2018, the government threatened to repossess the company. So by 2019, KCM's debt exceeded $2.5 billion. Developments of new operations had stalled, its underground operations were suspended, production at the company's acid plant declined. And a key step then was in May 2019 that the government then officially liquidated the company, officially because of environmental and financial regulation breaches. Minister Masukwa stressed this was not a nationalization exercise, but warned that this was a signal to other companies not complying with the law. And this liquidation was widely supported by mining unions, which organized solidarity actions in support. While the decision was highly popular locally, international business warned of a potentially disastrous effect on international investment. And attempts to attract a key needed new investor in KCM faded as the liquidation became the subject of local and international legal actions. In 2020, Zambia's Court of Appeal halted the liquidation process, and that led to arbitration processes, rulings in London courts that the Zambian government had breached dispute resolutions. So we see then a lengthy legal pursuit remaining unresolved at the time of the 2021 election. KCM was still operational, but the underlying problems of underinvestment and stagnating production remained unresolved. The second company to fall under this spotlight of both popular and official resource nationalism was Mopani Copper Mines, owned by the Swiss multinational Glencore. Took a 46% share in 2000. That was subsequently increased to 73%. Now, Glencore did invest considerable sums in MCM, but the company was singled out for its transfer pricing policies and widely identified among international criticism as denying Zambians the rightful benefits of the operation. In 2020, in the midst of global trade restrictions and the COVID pandemic, MCM tried to put its two mines into a so-called care and maintenance operation, halting production. And 5,000 contracting jobs were immediately terminated. The wider Copperbelt feared for the future of this key company. And again, we see the labour movement taking the lead in expressing community anger. In April 2020, in the midst of the pandemic, mine unions organised mine workers, marketeers, members of parliament, political leaders, suppliers and contractors in marches protesting the cuts to jobs. Mine Workers Union President Joseph Chewe called on President Lungu to use the powers he had used against KCM to take MCM under government control. Explicit electoral messaging. Union President James Chancer told the Minister of Mines, quote, "If you want our vote again, you must speak on our behalf and do something about Glencore. Glencore should rescind its decision or go back where they came from." And just days after these protests, the government announced it would indeed revoke Glencore's license to operate. So here you can see elite policy decisions dovetailing and giving expression to wider discontents among the Copperbelt community. And that narrative enabled PF, the ruling party, to present itself as protectors of citizens and Zambia's economic rights in the run-up to the 2021 election. However, subsequently, the takeover of MCM had revealed considerable limitations. A secret negotiated takeover announced publicly in January 2021 involved the purchase of MCM at a nominal $1 price and the taking on by the government of $1.5 billion of debt, a sum adding to Zambia's soaring national debt of $14 billion. And Zambia had only 2 months earlier become the first country in Africa in recent years to default on its international debt. Zambia then absorbed all the resultant risk and burden of mineral production, no long-term financial benefit from future rises in mineral prices. And one of our interviewees assessed the agreement like this, quote, "This is a dead deal meant to keep miners temporarily employed at the expense of the company, at least until the elections." The government, as with KCM, was unable or unwilling to find investments, $300 million estimated, needed to expand production. Now, this nationalisation can only be explained in terms of electoral politics, PF's attempt to secure Copperbelt votes via a resource nationalist policy. We see this again and again in the run-up to the election. On 7th August 2021, the trade union leader Chewe declares, quote, "Mr. President, we have been paid our benefits as you promised. We give you our vote." The president of the Numau union, likewise, "Mr. President, you answered all our questions, and because of that, we do not see a problem to give you our votes." So very clear electoral demands. And yet, we then see the victory not of Lungu's party, but of Hakainde Hichilema's UPND party. Now, just briefly on some background here, UPND Hichilema's party had gradually expanded its party's core support base in 2015 and 2016, but Lungu and PF maintained a decisive majority in urban areas, including the Copperbelt, which has always been understood as a kind of key to electoral victory. Almost no party has ever come to power without securing the victory there. Now, There are lots of reasons why UPND won nationally. I can answer questions about that. There's broader literature. And we're certainly not arguing in this paper that the victory can only be explained by the general failure of PF's resource nationalist policies. But what you can see in these tables, and you don't have to look at them in detail, is to see a really decisive swing in the vote from PF to UPND. Nationally, Lungu's share of the vote fell from just over 50% to just under 39%, Hichilema's from roughly 48% to 59%. So an average swing nationally of about 12%. But one of the most decisive turnarounds in the country as a whole was in this strategic Copperbelt province. Lungu had won this overwhelmingly in 2016, and yet Hichilema now received more than double the number of votes he received 5 years earlier. Copperbelt province saw more than twice the average national swing at 23%. And very briefly, and just to show you I have some detail here, these are three of the most key mining constituencies, all in locations or near to or of the operations of the two companies I talked about, home to significant numbers of mine workers or closely affected by company operations. These are communities historically involved in the mobilization of mine labor, in trade union politics from the colonial period to the present day, the epicenter of those local resource nationalist campaigns, where the protests were driven against the negative impact of Vedanta's operation of KCM or Glencore's tax avoidance in relation to MCM. And nonetheless, in these three mining constituencies, we see a swing from Lungu to Hichilema of 24, 22, and 29% respectively. So it's evident that not only were the resource nationalist policies deployed by PF ineffective in securing Copperbelt votes for the incumbent party, they contributed to or correlated with the most dramatic swings against the Lungu presidency anywhere in the country. Now, as we've said, the PF adopted an overtly anti-corporate nationalist campaign rooted on its attacks on mines and these nationalization and liquidation processes. The party sought thereby to demonstrate its populist credentials. But as we argue, local Copperbelt communities saw these initiatives as opportunistic and not designed to ensure that their expressed concerns about investment and employment creation were taken on board. Mine workers and their political and leaders were on the ground able to see the evident flaws in the takeovers. They understood that while the government focused on ever more populist measures narrowly directed at mine workers' take-home pay and benefits, those workers themselves and their wider community observed with growing alarm the decline of their strategic industry, which had, if anything, accelerated following these takeovers. This is evident from interviews with mine workers carried out during Lungu's election campaign meetings by my colleague, Dr. Musonda. Although many on the ground cheered his speech, they, in response to our questions, expressed little support. You can see a couple of quotes here. Jeffrey, an underground mine worker, added to these, quote, "We will get the money after all. It is our money. We have worked for it. He is not doing us any favor, and I cannot vote for him for giving me my money." There's an idea here that the resources of the mines and their operations belong to the communities that they're created in. Further interviews with Kitwe residents, mine workers, show this clear understanding of a critique of the nationalization process in practice. Mulenga, a resident of Kitwe, asked rhetorically, quote, "If all the money is going to Glencore, what is in it for us Zambians?" And Peter, a retrenched mine worker, said, "It is ridiculous to say we are nationalizing a mine and will create jobs without telling us how they will invest in the mine to achieve it." You see a similar sentiment expressed here by Emmanuel. And we can see this in our discussions with mine workers and community members more generally. So we would argue here, interviewees, local residents counterpose the legal nationalization of MCM in particular to a community-based vision of nationalization that could be both practical, ensuring that investment needed to ensure the mine would run effectively, but also equitable, ensuring that Zambians would be the primary beneficiaries of nationalization, both as a process and in the subsequent operation of the state-owned mine. Now, there's a clear transition here from 2016 to 2021. In 2016, as these processes were first being implemented, it was possible for Copperbelt mine workers and residents to be convinced that the liquidation first then of KCM might overcome the problems arising from Vedanta's evident failure to invest in the company as promised and as part of a sustained state-based economic development program that could revitalize the country's strategic mining industry, particularly to take advantage of what are historically high mineral prices. By 2021, the practical manifestation of PF's resource nationalist programs in the form of liquidation and takeover had become clear. And crucially here, I want to emphasize, mine workers and their wider community proved to be less interested in their own short-term financial gain and more concerned and more informed about the future of their industry and the wider economy. The 2021 elections also demonstrated the now considerable distance between mine union leaders and their members on political matters, and the consequent inability of union leaders to successfully influence voting behaviour as they have before, while the leaders of all the three main unions publicly endorsed Lungu's resource nationalist messaging and actively called for votes for him in public arenas. Their members apparently rejected this approach, and in applying their own characterisation of resource nationalism, chose to vote for UPND, despite UPND's total commitment to good governance, to working with and not against mine companies, and their criticism of the nationalisation measures that have taken place. Now, I want in the remaining time to just speak briefly about UPND's operations and UPND's record in office so far. The high expectations for positive change among Copperbelt workers and residents have, it's very clear, been heavily tested in the 2 years since the 2021 election. Unsurprisingly, and very much in line with their policy promises, the Hichilema presidency has in general sought to regain international investor confidence. And that's meant there's been a reversion to earlier neoliberal economic policies implemented since the return of multi-party democracy in 1991. A central element of these efforts has been to signal its willingness to revert to a more market-based, transparent approach to mining ownership and investment. In its first year in power, the UPND government persuaded Vedanta Resources to end its legal challenge against the 2019 liquidation, and that paved the way for the company to retake control of KCM, a time when the company promised to invest $1.5 billion. Meanwhile, Vedanta has engaged in a public relations exercise in Zambia to persuade local opinion that it actually has the company's interests at heart. This is controversial. Minister of Mines Paul Kabuswe has denied that the government plans to simply hand KCM back to Vedanta, and a dispute was briefly heard by a court of arbitration in January 2023, with the decision not being fully resolved. Broadly, however, those reconciliatory signals have definitely improved Zambia's much damaged reputation among international observers. In September 2022, Mines Minister Kabuswe happily reported that all legal action between Vedanta and the government had been suspended, and that paved the way for talks. And likewise, Glencore, which initially sold its interests in MCM to the government in 2021, is in practice keeping the nationalised company afloat by covering some of its bills. So that's kept the two companies working okay, but Zambia has failed to identify the kind of alternative investor that would put large amounts of resources into the mines. MCM has continued in practice to operate at a relatively low level. So we've seen in both cases a relatively sluggish operation by the companies at a time when very high mineral prices could be earning Zambia vast amounts and helping bring in large amounts of foreign exchange. Nonetheless, those pro-market signals assisted the Hichilema government in securing an initial $1.3 billion loan from the International Monetary Fund in August 2022. And that was an absolutely key step, a bailout seen as vital in ensuring economic stabilization following the 2020 Eurobond default. That IMF agreement, and people may have questions about this, built on a really crucial public acknowledgement of the scale of the country's debt. It was revealed for the very first time that the country had, at that time, $17 billion of debt, including, crucially, $6 billion of debt owed to Chinese lenders in deals that had hitherto been essentially secret, known about, but not publicly revealed. And also recognition that Zambia was spending 2/3 of government revenue in debt servicing. That paved the way for rescheduling and relief of a targeted $8 billion of that debt. And we saw last week an agreement that the first $6 billion of that, including $4 billion of Chinese debt, had been agreed for rescheduling and relief. The result of those agreements is, however, an unavoidable shift in Zambia's budget, an agreement by Zambia to move from a budget deficit of 6% to a surplus of 3.2% by 2025. And that involves a really major new wave of economic austerity policies, crucially the removal of electricity and fuel subsidies at a time when, of course, the Ukraine crisis has led to major rises in energy prices, as well as the price of other goods on a global basis, something which has affected Zambia in particular. More generally, the mining industry remains in the doldrums. In 2021, MCM produced just 87,600 metric tons of copper, and it continues to rely on imports of copper from the DRC for its local processing. The company continues to be unpopular for failing to pay subcontractors and, crucially, to meeting its corporate social responsibility obligations. So it continues to be seen locally as unpopular, as financially irresponsible, the very demands that led to its nationalization. Meanwhile, the Hichilema government has, for example, proclaimed the opening of Africa's largest nickel mine in Kalambila in Zambia's northwest province, the area of the greatest new expansion of operations. And here you can see something which is a real challenge for the government. This is a project established by First Quantum with a relatively modest but significant investment of $250 million, but it involves, unlike virtually all post-privatization mining projects, no substantial co-ownership, either by local investors or by the state. And despite Hichilema's suggestion that the mine would raise the living standards of both the local and national population, it will create, like many contemporary mining projects, only 700 new jobs. So we see one of the difficulties of showing benefit to local communities is simply that contemporary mines offer many fewer jobs, also jobs that require much higher levels of education or technical proficiency that locals cannot so obviously benefit from, as they did in the past when a mine might employ 15 to 20,000 relatively unskilled workers. So we can see here potentially a recurring pattern of Zambia's recent mining history of foreign ownership that offers little sustained investment, offloads responsibility for the social and environmental effects of mining onto national and local government, and continues essentially exploitative, unequal patterns of employment and subcontracting, now under a widely internationally heralded UPND government. I do want to, however, say that in amongst these relatively austere policies, UPND is doing things which don't fit into a historically recognizable model of austerity and neoliberalism. For example, shortly after coming to power, UPND declared that it would offer, along with 2 or 3 other governments in Africa, Ghana in particular, free secondary school education, something which very much cuts against the idea that simply spending is being cut across the board. In order to support that program, it invested in and has brought about into realization a major training program for thousands of new secondary school teachers. In other words, quite a strong interventionist approach in a policy area widely recognized among donors as one of the most important, educating young Zambians. Now, so we see, on the one hand, as I say, international praise for Zambia for its debt transparency and its attempts to reform its economy. Secondly, a significant degree of general popularity in Zambia for these investments in things like social programs and particularly in education. But on the third hand, a generally unresolved state of affairs in the mining industry. It remains unclear as to whether Zambia can effectively resolve and address these tensions. There is a risk, I would say, that if the mining industry remains effectively unreformed, that a new space may be created for either PF or a successor party to mobilize and take advantage of the widespread disillusionment and concern about the future of the mining industry in the strategic mining area in the run-up to the next election. That's something we will wait and see. Okay, I will just offer a few conclusions and I can obviously expand on any of these if anyone is interested. So the key thing that I want to show here is that the use by Zambia's ruling party, the Patriotic Front, of anti-corporate resource nationalist policies and measures in the run-up to, during the 2021 election, proved ineffective in securing electoral support nationally in this strategic Copperbelt region and amongst mining constituents and mine workers in particular. The liquidation of KCM, the nationalisation of MCM, and a series of related populist measures specifically targeted at mine workers, their families and communities, not only failed to secure electoral victory in what had been PF strongholds, it actually coincided, correlated, and perhaps caused large swings of support to the opposition UPND, some of the most dramatic swings between the 2016 and 2021 elections seen anywhere in the country. And that, combined with a large number of Copperbelt votes and their political significance, played a key role in securing electoral victory for UPND, a party which has consistently promoted pro-market economic solutions. While there were many reasons for the defeat of incumbent President Lungu, his failed resource nationalist policies were significant in alienating the Copperbelt Labour support base. And while those policies were ostensibly designed to attract the votes of that very community who had been alienated by the failure of mine privatization to deliver promised investment and to ensure that the benefits of high global mineral prices reached Copperbelt communities, they failed to capitalize on the widespread support on the Copperbelt and indeed in much of Zambia for a more credible resource nationalist strategy by the Zambian state. The liquidation of KCM and nationalisation of MCM were poorly planned political gestures that led to the acquisition of additional national debt. They were not designed to inject the investment necessary to make Zambia's mining sector, with its great potential for much higher and sustained production, profitable and productive for the country and the region. They were carried out, crucially, without consultation or participation with affected communities, trade unions or workforces. So we might characterise them as resource nationalism from above, creating in practice a policy vacuum and investor uncertainty while reducing job security and increasing hardship across the Copperbelt. Now, as I say, while the UPND's electoral victory may signal the end of Zambia's recent electoral engagement with populist resource nationalism, which has been a dominant theme in the country's politics now for nearly 20 years, popular discontent against the operations and business practices of foreign investors in general and private mine companies in particular shows no sign of decline. So we might think that in this context where Zambia's poverty and dependency on mining, although reduced from the past, isn't going to end anytime soon, there is potential for new political champions to target Copperbelt communities and find ways of articulating and mobilizing around what we might term their resource nationalism from below in the years ahead. I'm happy to speculate about the future. If people are interested, I can also think about and give comment to the wider resonance of this for the continent as a whole. But I will stop there and thank you for your attention and hand back just now to Eric.
Try to Okay, well, thank you very much, Professor Larmer, for this fascinating and very dense and very rich overview of politics of mining and relations with elections and government legitimacy. And well, I think quite a few surprising for me anyway, surprising developments that the whole populist policies of the Lungu government in the end failed because there was no result. I guess this also points to a relatively sophisticated level of understanding of what is at stake with the Zambian public. I would just, before handing the floor to the people who are following us, I would just take the opportunity to ask myself two questions. The first one was, as you know, in 2018, in the Congo, the Electoral Commission never published the electoral results of the elections. People were simply appointed in Parliament, and so the results of the elections were simply put away. No more than that. A person who was not elected was appointed president, etc. So there was no respect at all for the results, and still the non-elected president is still in power. Now you see that in Zambia, you say it was the opposite, that everybody knew that Lungu would try to cheat, but he failed also to cheat. So how do you explain this? Are there stronger institutions? Is there a longer tradition of respect for electoral results? Was the political support for Lungu for cheating the elections very small? Was the electoral commission strong or something? Could you say something about this? And then maybe a second question, more particularly related to mining. As we all know, what is really at stake now, even at the continental level, is the opportunities for mining policy, which are opened up for the African countries through the competition between the European Union, the US, the China, maybe a little bit Russia. I mean, was this opportunity present for was present for the Zambian government so that they could play one group of actors against the others or not?
Thank you. These are substantial questions, so I will try and be as brief as I can, particularly the second. On the first, this is a very much I would say electoral transparency in Zambia is a work in progress, and we're not looking here. This is really important, I think, in terms of being optimistic. We're not looking here at a country that is that has self-evidently strong institutions. In terms of pulling up the data for the 2016 election, we had to work quite hard because definitely this data was not available from the Electoral Commission. There was no doubt rigging and attempts to manipulate the election quite significantly in 2016. And some observers, although we can never know, would say that UPND and Hichilema would have won in 2016 without election rigging. So we have to go with results that we know are likely to have been adversely manipulated in some respects. What I think has happened in the last 4 or 5 years is, as Lungu took Zambia to quite an authoritarian precipice, manipulating ethnic divisions, weakening institutions, there was quite a strong pushback against that. Zambians remember the achievement of winning multi-party democracy in the early 1990s, of resisting previous attempts to have a third term in office by former President Chiluba. And as you can see, there is quite a strong dynamic popular mobilization tradition, although of course that has a double-edged element. It can be both mobilized for presidential campaigning against minorities and against civic institutions, but also at crucial times has mobilized for electoral transparency. So I would say that the 2021 election saw a kind of confluence of Electoral Commission resistance to manipulation, online media, which has replaced more traditional media and has shown itself to be able and willing to publish results quickly and transparently, and quite a strong civic determination to resist what was evidently going to be, as you said, a likely electoral rigging. But that's really important. I was attending a lot of meetings in the run-up to the election. International observers were very pessimistic that this election could be saved, and everyone thought, it shows the limited wisdom of experts, that there was a likelihood that Lungu would simply get his way. That wasn't the case, and that really did rest on a quite impressive civic mobilization within the country. And there is a hope and an optimism, and the last 2 years do make people feel strongly positive about this, that under Hichilema, free speech, popular mobilization, and political criticism has, which had all been partly repressed by Lungu, has found more effective space again. So not pre-existing institutions, but civic agency. Secondly, on mining, very important kind of set of issues here. One of the things I tried to emphasize in the presentation is while Hichilema's election demonstrates that ordinary Zambians do want to see transparency, good governance, and well-managed mining, that doesn't, in many respects, that's the opposite of the kind of free-for-all, free market approach to mining that we saw often in the 90s and early 2000s. A company like Vedanta was able to come into Zambia partly as a result of a very untransparent privatization process. And as I say, those secret development agreements enabled companies to take on projects that in many cases they were probably ill-advised. And I think in countries like the DR Congo, we can definitely see that. We're aware that certain contracts, certain mining operations are determined more by political fiat and self-interest than the capacity of those companies to really run operations. Somewhere in the middle, there is a point about, I would say, governments and countries getting good mining companies by having good laws and transparent procedures. Cowboy companies, if I can put it in that simplistic term, look for weak and corrupt governance and find themselves in those spaces. Well-run mining regimes don't have to set very high tariffs for entry, but they need to have transparent systems. And good companies, well-run companies, will respond positively to the guarantees enabled by those situations, I think. So I think it's a good time for competition, the entry into mining economies in Africa, but also competition can also bring conflict. African countries would like there to be competition over who wants their minerals. There definitely is that in a period where we've seen, despite economic difficulties, pretty sustained mining mineral price rises. We can see this increasingly with the emergence of the lithium market, which is definitely going to be one of the frontiers of future mining in DR Congo, but also in Zambia, in Nigeria now, with expanding lithium production for clean energy. And that's going to see this kind of competition. I think the principles that African governments need to practice and will be in their benefit are set out in, for example, the African Union's mining vision. This is not about either opening the doors to any investment, nor about making it difficult for mining companies to operate. It's rather about having clear, transparent, and well-documented procedures, and having competition between potential investors, both countries of influence, as we've talked about, and also mine companies, where those procedures can be put in the public domain, crucially, and rather than being subject to secretive and often corrupt negotiations that benefit politicians and fail to benefit ordinary Africans.
Well, thank you very much, Professor. If I may suggest, if there's somebody who has a question, I think you can ask it either directly or put it on the Q&R tab, as you see on the bottom of the page of the Q&R tab. Somebody has put a publicity message on it, but maybe there's also something more serious. Well, if there are no questions from you, maybe I have one, if you allow me. So, Professor, you were talking about Vedanta resources. I mean, could you say something more? Because I think it's a really very interesting example on how a company succeeds to get into the which was a relatively closed mining economy before, at least in the colonial times. Do you know something more about the background of this company, the strategy? What did they want? How did they succeed to remain in the country and have some publicity campaign instead of serious investment? I mean, what is this type of company, and what do they want? What is the strategy? I don't know if you could add something to this.
I can talk briefly about it, but it's not something I'm an expert in, and I'm also going to be slightly careful because I could say certain things that might be subject to kind of legal action or libel action. I think the reality is Vedanta is a strong company and a very well-established company in its homeland in India, where it's involved in a wide range of economic areas, and has instructively strong political links within that country. What I think we can see is the establishment of a contract to run KCM, which lacked any kind of, it made promises that, if effectively surveyed at the time it was taken on, were simply not credible. I think it's absolutely clear that in retrospect that the promised investment was never in any way sort of credibly rooted in planning, in demands, and that I think can only be explained in some respects by a rather secretive, untransparent process of privatization that put a number of mines in the hands of problematic foreign investors. I think the key period for that was the early 2000s, and here I would say the international community played a very negative role in, because there was a debt burden, in rushing Zambia into a hasty privatization, which at the insistence of companies was kept very untransparent. That led to poor decision making, and we know in a couple of other cases, I'm not going to comment specifically on Vedanta here, that money changed hands between companies and politicians. Former President Chiluba, now deceased, was, I think, credibly accused of having benefited personally from some of those privatization processes. We're seeing then the working of that through, and I think the Vedanta case is an instructive one, because I think Glencore, while in many respects an unpopular company, is a credible, large-scale international mining player with investments in many countries. I can't see myself that there is a future for a direct Vedanta operation in Zambia. And I think one of the problems at the moment is that there is a bit of a paralysis, because Zambia legally owns this company, but in terms of likely investment is never really going to be in a position to implement its rather vague promises about developing this mine. And the project is, the Konkola deep mining project, which it controls, is probably among the most important in terms of Zambia's mining future, one with the greatest prospects for expansion, profitable development, and wealth creation in the future. So the government really faces a bit of a hurdle or a kind of a crossroads in terms of how it addresses Vedanta. So Vedanta will continue to be a major corporate player in a number of places, but I think in terms of being credible in the Zambian context, I think that it's hard to imagine that coming about. And here we can see, I mean, this speaks, I guess, to a broader point, which is the proliferation of non-traditional investors in an African context. The relationships historically were always with essentially Anglo-American mines, and in some cases, the Anglo-American corporation, which had a sort of colonial Western legacy. We have seen the entry, in many ways positive, of a much more diversified range of mining companies coming from Canada, Australia, of course, in significant numbers, with European bases, but also with from China, most crucially in Zambia and in other African countries, where on the face of it, and if we take off our Eurocentric kinds of lenses, these should provide really good, credible opportunities for investment and sustained investment. But those need to happen in, as I say, within a kind of clear public context. And I think one of the things that is difficult is it's quite difficult to necessarily assess all those companies in a kind of uniform way. On the one hand, we see Western-based companies in places like Canada or Australia, and it's true about Glencore in Switzerland as well. They come under pressure from what we now understand as shareholder activism. Communities and shareholders in those countries put pressure on those companies, completely correctly, for improved environmental, social, and governance policies to try and clean up their act from poor policies in the past, poor labour policies, polluting practices, and so on. But they're often in competition effectively with companies from non-traditional areas, and we might prioritise Chinese companies in this regard, that have much fewer domestic pressures on them to act as good investors. China does have ESG type policies, but we are very aware that that is not happening in a kind of public, transparent sort of context. And Chinese companies in Zambia have been identified as being extremely unpopular with local actors. So one of the prospective investors, the obvious logical investor in one of these companies, would necessarily be a Chinese investor. But on the ground in Zambia, Chinese investors are associated with very poor labor practices, often racialized kind of management approaches, and so on. So I think one of the real challenges for a government like Zambia and for international commentators on this is to identify what is a really good investor, what good investment looks like, and to ensure the kind of transparency and partnership that I've described.
Okay, thank you very much. I think it would be very useful maybe to conclude with what you hinted at just a moment ago, when you said that the situation in Zambia some general conclusions could be drawn for the African continent. I think you already gave some of those. But before that, I just have a little question. So you were referring to the austerity measures that will be taken from in Zambia. Does it also include subsidies to agricultural production? Because as you know, this has important repercussions for the neighbor countries.
The focus of subsidy removal in the immediate period is on fuel subsidies. And that's a hot topic in Zambian politics. At the moment, I think the government has already reduced agricultural subsidies, but they haven't been removed entirely. That has been a very important issue, not to the extent that it has been in, say, Malawi, but in the past, governments in Zambia have retained particularly subsidies to fertilizer, which are widely seen as important agriculturally and are enormously unpopular among donors. I actually don't know off the top of my head, because it's not what I've been looking at recently, where the current Zambian it's the kind of thing that they definitely are seeking to remove. I don't know whether the current budget and decisions remove such subsidies entirely, but that's certainly the direction of travel. It's something I need to check on. More generally, I think the optimistic view we can take here is, the thing that really strikes me is this is a well-informed electorate, able to distinguish between what we might call direct electoral bribes in the shape of almost literally handing over resources from the mining industry into the hands of unions and mine workers, and I haven't gone into that in detail, and a group of people who are able to see beyond that and focus on the future of their industry, to think about investments. And there are a number of things that contribute to that. I would say that social media is important in regard to this. These are, if you like, individuals who in the past would have depended on their trade unions and constrained local state-controlled media to tell them what to think and understand about this. This is a group that has always, in some respects, mine workers have always known the value of their resource on the London Metal Exchange, for example, and its effect on their economy. So mine workers, at least, have always been globally connected to international capital in that regard, in terms of informing their decisions. Put simply, you don't go on strike if your mineral is loss-making, but you might take action if you're aware that your company is making large profits. Today, with the benefit of internet connections, of Wi-Fi enabled smartphones in the hands of many people protesting on this, and their ability to upload videos, for example, of their demonstrations straight onto the internet, there's a great sense that they can go beyond any attempt by national governments to constrain their access to information. Of course, there are negative aspects of that potentially as well, in terms of attacks on minorities or populist campaigning. But I think that when we see a degree of transparency, and I've been in Ghana recently talking to people involved in the gold mining industry, there again you see an economy that has austerity, that has real economic problems, But on the ground, you see a high level of transparency, policing out or reducing over corruption and bribe taking, and introducing a degree of transparency and the holding by independent media and local actors of, for example, large-scale gold mining companies to account for their decisions about investment, employment, pollution, and other factors. So we're not ever going to be, that's not something that can or probably should be controlled, but I would say that here's my typically on the one hand, on the other hand answer. On the one hand, African economies, African mining areas face among the most profound challenges they've ever faced. Mining companies are not generating the number of jobs they once generated. There are still complex financial institutions in place to offshore profits, to hide profits, and to manipulate still relatively low capacity national governments in the effective and equitable management of these strategic mining resources. On the other hand, communities here are as well informed, much more well informed, and much more connected to the injustices and the economic activities, both of mine companies and of elite political actors, than in the past, much more informed than in the past. And we can see one manifestation briefly of this is local actions, legal actions developed in country, but taken in British courts, European courts against mine companies, class action lawsuits, which in one case led to a settlement by Vedanta for mine pollution, affecting thousands of Copperbelt residents in a class action lawsuit decided in a UK court. So that speaks to the extent to which these communities need to be understood as connected, as global in their approach and local in their specificity. And if that doesn't enable them to overcome all these profound challenges, economic, political, and environmental, at least it enables them to ask questions about those in a much more informed way. I think that's something we can see across the board in Africa, somewhat affected by national policies, somewhat affected by historical political cultures, but undoubtedly that kind of connectedness within mine communities and to some extent between mine communities across the continent in the form of civic campaigns, non-governmental institutions, the church. That's somewhere where I think we can see some quite optimistic signs of a kind of maturing of the democratic nature of some of these countries 20 or 30 years after the advent of formal democratic rule in some African countries in the 1990s.
Well, thank you very much, Professor. That's a very important and rather optimistic, relatively optimistic conclusion, which I think we can draw a lot of lessons on it, and maybe it's food for comparative studies. I think, well, on the name of Egmont, I think we thank you very, very much for this extremely rich presentation. I hope that if you come by in Brussels, that you will, we will be able to have you in person.
And you can ask me in 5 years' time whether my optimism has proven in any way correct.
Well, please don't wait for 5 years, please. Well, thank you very much. If there are no questions, then maybe we can conclude here. And well, I wish all the participants a very nice day. And please, the whole seminar has been registered, and you will be able to find it back on YouTube to recapture the very rich content of the seminar. Thank you very, very much, Professor. And I forgot to say that you were teaching at the University of Oxford in the UK. Thank you very much.